Good morning, trading world. It is December 29th, 2022, and this is my pre-market outlook and technical analysis for day trading the markets. It's 8:38 a.m. on the East Coast. Let's get into this morning's outlook. The year-end countdown continues. However, the market is sending 2022 out with a bang, or more of the same downtrend, I suppose. I am looking at an underlying rally trying to build, but it's like price action is a balloon slowly being filled with air underwater. Eventually, the tax law harvesting will lose its grip and the balloon will soon fly up. I was originally thinking all this would happen on the 1st, but we should be ready to take advantage of an early fly up. A little today, a lot more Friday. Market makers are smart. They know there will be a lot of new money put to work on the 1st and 2nd, or whenever we come back from the holiday. So I wouldn't be surprised if they jumped ahead of that by getting the biggest part of the run out of the way on Friday. Another reason we will get early execution of this is that we are so close to falling back into the relentless volatility box below 373 on the spot. If we fall and close down inside that vol box, we get beat up and tumbled around down towards 355 quickly, and it would be hard to come out of that. So I think a lot of buy the dippers and money managers alike will be waiting to prevent this from happening. Today we shall see. Now, on the other hand, there are a lot of defensive stocks that I am looking to get positioned in because money managers ran them up to such inflated values. Just do a scan for stocks near or within 3% of their 252 period highs, that's yearly highs, and you can cross-reference that with PE levels above 15. The logic, the higher the PE ratio, the more inflated that stock is, and the better a short it will be. The logic is if a boring company that has capped out on growth has a PE multiple that is way out of whack, that's hence 20, 30, way out of whack, and it's been ran up because money managers were trying to hide behind dividends, these are likely good shorts going into the new year, because once the quarter ends, everything changes back to the drawing board. No need to try to dress up statements. So hiding money in these pretty chart companies, all that goes away first of the year. With that being said, let's get to the levels to watch for the day. Alright, here we are back with the key levels of the day, starting on the resistance side. We have our jack resistance at the 378 to the 379 area, queen resistance at the 380 to 382 area. Look for a lot of chop to happen in here. This is going to be one of those areas where we look for an important breakthrough or breakdown. And then we have our king resistance at 383 to the 386 area. On the support side, we have our jack support at 377 to the 376 area. Queen support is 375 to the 374 area. And then king support 373 to the 370 area. Remember, the reason why there's a lot of attention placed on this area, this 379, that is the edge of the main channel. So it will take some energy or strength to bust through that. So it may take a couple repeat tries to break through that. So we could get a come up here and then a pull back off of that because it didn't have enough strength to get through on the first or second try. The main thesis for today, it is a small bearish bias. Matter of fact, it's so small that I shouldn't say 50-50. Closing below the 376.66 with a projected target low of between 376 and 374. And the reason I'm going to say a bearish bias is because we may end up, after all is said and done, after popping up a good ways today, it is quite possible we can end up right back where we started today. If not right back to where we started, but look for a overnight or pre-market start back around this area where we started from today. All right, the alternate thesis, which is the more explosive, is a bullish bias closing above the 376.66 with a projected target high of between 377 and 386. The current major channel we are in is 379 all the way down to 364. The major channel above that is 379 up to 397. We have somewhat of a distance between the technical side, which is bullish, and the quant side, which is more so 50-50. Market strength and breadth started high on yesterday, but fell off a cliff shortly after the opening. I expect to open off the lows of yesterday, but revisiting those lows at some point during the day or overnight going into Friday's session. So that is pretty much what I'm looking for in a nutshell, and probably what I will look for to happen is probably a test of this 380 level before falling back to reality. It may be another try and then a bust through at some point tomorrow. This is pretty much or close to what I'm looking for. A try, another try, and then possibly the try tomorrow that breaks through this region and gets us going on a big bullish run for a day or two. All right, that should do it for today's pre-market outlook. As always, your most important job as a trader is to protect the capital that you already have, and we do that by knowing and understanding the risk that we have on in each position. And we manage that risk in accordance to our account size. Again, I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.